Hello, everyone. Welcome to another episode of the Modern Markets Podcast. And today, this is a very special episode because this is the Bitcoin Halving edition. It is quite late here. I don't usually want to stay up this late to do a podcast episode. However, we got to bring you guys the sauce. We got to bring you guys the information on the Bitcoin halving. And that is exactly what I am going to do today. So also, by the way, it's called Bitcoin Halving, Bitcoin Halving. You can call it whatever you want. Essentially, the breakdown of what the Bitcoin halving is essentially, and by the way, I'm losing a little bit of my voice. I've been doing streams this whole week and podcast episodes, so bear with me. I'm trying not to be too scratchy with my talking. So the Bitcoin halving essentially breaks down to every 210,000 blocks that are created on the Bitcoin blockchain. There is an algorithm it's built into the open source code of Bitcoin where the incoming supply or the incoming block reward will essentially be cut in half in one block. So right now, and I'll explain this a little bit more in depth. So right now we're looking at about 2 days and 22 hours based on the average block generation time of 10 minutes. So what this means is that, based on the difficulty of how hard it is to mine Bitcoin, obviously, you're competing with other miners, to compete for the block reward of Bitcoin mining. Based on this time, we're looking at 2 days and 22 hours left until this block appears, which would be a 210,000 block from the last Bitcoin halving, which was in 2016. Why is this important? And first of all, what is a block reward? Well, a block reward is essentially when miners are competing to win the block, so to speak. They are trying to win the block reward. Now, when Bitcoin was first created and it first launched on January 3rd, 2009, which was the Genesis block, you could receive 50 Bitcoin per block reward for every block that you mine. So if you were an early miner and you were just playing around with Bitcoin, you could literally earn 50 Bitcoin every block just playing around with Bitcoin. So if you were just like an IT guy and you saw, this cool Bitcoin thing and you just wanted to play around with the tech and just see what was going on, and you just started, mining Bitcoin with no competition, there's nobody else competing against you in the early days of Bitcoin. That wasn't a problem because nobody had known anything about Bitcoin at that time. So you could literally earn 50 Bitcoin, no problem. And then after a couple years passed by, after 210,000 blocks passed by, in 2012, cannot remember the exact month, but in 2012, the 210,000 block was mined from the beginning of Bitcoin's creation, and that cut the Bitcoin block reward supply from 50 to 25. So it cuts it in half. And then, of course, in 2016, we also got this cut in half again. So we went 210,000 blocks from 2012 to 2016, which, by the way, obviously takes about 4 years for 210,000 blocks to be created. So it's an average block time about 10 minutes, which gives you that kind of that 4 year time period. So in 2016, we cut the block reward from 25 to 12.25. 12.5. So now what is about to happen is we are about to drop to 6.25 Bitcoins per block. This is pretty major. I've talked about it multiple times on many different podcast episodes, many different live streams. What is the major importance of this Bitcoin halving in particular? Well, obviously you have the supply, the incoming supply decreasing. This is a deflationary strategy that was implemented by Satoshi Nakamoto, she, or whatever organization that created Bitcoin. And it's actually a really quite genius strategy, if you'd ask me. The strategy is essentially it's deflationary. It's the way money should work, to be honest. Of course, this also doesn't change the fact that the total max supply of Bitcoin is 21 million. That's never going to change. So as time goes on, obviously, we have a cut in supply or incoming supply every 4 years around there, or 210,000 blocks. So the next Bitcoin halving, which should be in around 2024, would obviously cut the Bitcoin incoming supply from 6.25 to around 3.125, somewhere around that range. There's going to be less and less Bitcoin for people to get their hands on, which obviously is a very big deal because there's only so much Bitcoin to go around. Somebody told me there's about 55 million millionaires I think 55 million millionaires across the world. 55 million millionaires would not be able to get their hands on even one Bitcoin because there's only 21 million Bitcoins. This is a very, very scarce asset, folks. It is a very, very big deal. And you know what? Paul Tudor Jones agrees. It's a very big deal. Paul Tudor Jones on, I believe it was May 7th, came out. There was an announcement that came out and said that Paul Tudor Jones likened Bitcoin or resembled Bitcoin to the gold rush, so to speak, with the price in the 1970s. And his bet, this is his quote, "My bet is it will be Bitcoin if he's forced to forecast the fastest horse, basically. That fastest horse is going to be Bitcoin. Gold is just, let's talk about gold for a second. Let's compare gold to Bitcoin. And by the way, you can hold gold all you want. You can hold gold, silver, you can hold Bitcoin, you can do whatever the hell you want. This is not financial advice. I don't care what you do. But I will explain to you the reasons that holding gold over Bitcoin may not be the best decision. First of all, if you need to flee the country for whatever reason, for whatever tyrannical government reason that may arise, which does arise very often, especially in Venezuela and Argentina, we've seen that, then you are not going to be able to get away with your gold or your silver. It ain't going to happen. Especially in America, TSA is going to stop your ass at the nearest TSA checkpoint and say, "Hey, what's all this gold doing here? We think this is related to the cartels. Sorry, buddy, we're going to have to take your gold now, and we'll just figure it out." There's no way to check to see if it's really your gold or not. So we're going to assume that this is the cartel's gold and silver. And you know what? I might even take it home from the checkpoint, extracted items, confiscated items that the TSA has a very wide selection to choose from. And that's the first thing. Second thing is, how accessible is gold? Well, we saw during the coronavirus, outbreak where people were trying to get gold in New York, and they could not. They could not get gold. There was a shortage. They could not get gold delivered to New York. There was a problem with supply chain. So, when I want an asset to be readily available to me in a time where I'm not sure what's going to happen, in the financial industry or just in the world in general, I want to be able to, first of all, own whatever that asset is, which, you can't do that with paper trading of gold. You can't do that with the ETFs with gold, so there's a problem there. But with Bitcoin, I can literally say, "Hey, buddy, on Zoom, my friend on Zoom, could you sell me some Bitcoin? I'll PayPal you right now. It's like $5,000, and I'll just scan your wallet, or you can scan my wallet and send me Bitcoin." And that's as easy as it gets. Now, if I said, "Hey, I need some gold, buddy. Could you send me some gold? I'll send you $5,000 on PayPal." Okay, sounds good. I'll wait on FedEx to deliver it, if FedEx even delivers gold. I have no idea. What's the weight ratio on that? So you get my point in this. But I will also, obviously, silver is the same thing. Silver is a metal. Gold is a metal. I don't even have to get into the 1930s confiscation of gold, Executive Order 6102. That's a good one. Look that one up. It's a fun one to look up. Very nice history. But let's just talk more about Bitcoin. I want this to be like an episode that pretty much gives the basics on what Bitcoin is for anybody who doesn't understand. So first of all, I want to let you know that Bitcoin is not just a currency. It's not just a store of value. It's much more than that. Bitcoin is an open source technology that you can literally use, integrate, build on top of, use as the foundation for your company, for your own project, whatever. But it also serves as a currency, and it also serves as a store of value. Bitcoin is so amazing. It's really hard to just put it all into one statement. And it's really hard for a lot of people to understand because they may not understand the open source tech part about Bitcoin. So Bitcoin is essentially created by computers running specific hardware. This hardware is called miners. Now they use specific created mining hardware that allows them to solve a hash. Now this hash is what's important to be able to, and you're solving the block, by the way. So as I was speaking about earlier with the block reward, you are solving the hash, and that solving that hash, I think it's a long hash. I can't tell you exactly how many characters it is, but the hash is essentially what connects the previous block to the next block that's going to be created. So whoever creates or solves this hash essentially wins the block or wins a part of the block. Because again, you're competing with thousands and hundreds of thousands of miners across the world, to compete and win these blocks. So it's absolutely incredible, the amount of computing power that's being put behind Bitcoin. First of all, but that's not even half the story. So they have to solve this hash to essentially say, okay, this block is now connected to this next block, because you don't want any kind of hack, we'll talk about little hacks as well. You don't want any type of foreign entity to be able to come in to the Bitcoin consensus network and say, okay, this block is now going to be the official block that connects to the previous block. The problem with that is if you don't have consensus, and this is where the Bitcoin miners, solving this hash comes in, if you don't have this consensus of what the next block is going to look like connecting to the previous block, you could essentially say, okay, this block is going to be worth 10 million Bitcoin in a transaction. It's going to be sent to my wallet, but it never happened. That's not real. It's not a real transaction if you fake that block, right? Well, that's what the consensus is for. That's why the miners are essentially putting all this computing power towards solving the block, because they're all competing to create a consensus of what the blockchain looks like. And this is very important because this is what adds to the immutability of the blockchain, of the Bitcoin blockchain. Now, obviously, there are other blockchains that have obviously copied this Bitcoin open source technology, but Bitcoin is obviously the most powerful because there are so many people competing to win the same blocks. They're trying to win Bitcoin because it's so valuable, because it's so sought after. So they're all doing this, and by them all competing to win these Bitcoin blocks, they're all competing to make sure that the Bitcoin blockchain is so freaking secure that there's absolutely no way that it could be hacked. The only hack that you could really do with the Bitcoin blockchain is what's called a 51% attack, by the way. And a 51% attack is not even possible anymore. It's not mathematically possible. And basically what this is where 51% of the mining hash power could be dedicated to essentially rewriting blocks or creating a false block. And again, this is not possible anymore, but it happens on other blockchains that are not as powerful as Bitcoin. But because you have all these miners that are essentially dedicating all their computing power to making sure that the Bitcoin blockchain is immutable, it is correct, and it is not 51% attackable. Attackable is a new word. I just made that word up. It's not possible. This also, I would get into quantum resistance in this episode, but I won't, just because it's a little bit more advanced. But this is also the reason why Bitcoin cannot be hacked. It's not possible anymore. The code is open source. Anybody can view the source code. You can literally go find it. I think on GitHub, there are a lot of developers that contribute to the source code. Changes are very, very slow because, we're talking about Bitcoin here. You really don't want to screw up the open source code for Bitcoin. So it's watched very closely, and the updates that do get pushed out that the miners have to accept on their updates are very minimal. And I actually like it this way better, to be honest, because I like the original source code. So I do like that the developers take a little bit longer to update the source code. Only 21 million Bitcoins will ever exist. We spoke about that earlier. 18.364 million have been created. Now, also keep in mind that there have been a lot of Bitcoins that have been lost as well. So if you lost 10,000 Bitcoin on an old laptop that you threw away on accident because you didn't think Bitcoin was going to be worth anything, that 10,000 Bitcoin is gone, and there's no way to get that back unless you could find that laptop. And this has happened on more than one occasion. There's lots of Bitcoin out there that's been lost, and I would feel really bad. There's also the guy that bought a pizza with 10,000 Bitcoin. That's a shame. This is going to continue to happen. Bitcoin is going to continue to get more scarce. It's going to happen. It's only a matter of when, not if. By the way, Bitcoin has no CEO or president. There's nobody running Bitcoin. There's no one person running the open source code of Bitcoin. It is decentralized. There's no CMO for Bitcoin, marketing Bitcoin. The people essentially market Bitcoin on their own. So that is, it's fantastic. It's fascinating to see a grassroots movement like Bitcoin become what it is today, and it's really reflective of what the internet has allowed for. We do see a lot of censorship, and we do see a lot of control and an authoritarianism across the world, but we also see grassroots movements and decentralized solutions of people who are tired of putting up with the crap, and of people who know the truth behind a lot of the things that are happening, and they're fighting back, and they're using the internet to do so, and they're using Bitcoin to do so, and decentralized solutions as well. The power is essentially back in the hands of the people, especially the marketing power of Bitcoin. So Bitcoin is impossible to counterfeit, so this is very important. So you can't go to your printer and say, I'm going to print off some dollars. I mean, obviously, it's a little bit harder to print off, to counterfeit dollars, but it is possible to counterfeit dollars. The Federal Reserve does it all the time. That's a fun one. But Bitcoin cannot be counterfeited. When you have a piece of a Bitcoin or own any Satoshis or own a Bitcoin, that Bitcoin is 100% legit unless you're buying Bitcoin Cash or Bitcoin SV. That's a whole different topic, but we will talk about that in a future episode. It relies on blockchain technology. Of course, this is the most secure database in the world. There's nothing close that comes to the computing power of Bitcoin, and that is a major accomplishment of, again, the power being put back in the hands of the people, essentially saying, look, we want the value from this store of value, this currency. So we're going to use our computing power and our money and our electricity to mine this asset. And so I want to talk about some Bitcoin quotes from some friends of ours. Equities Tracker, Andrew Vong. He is Chief Future Officer at Equities Tracker. Great friends of ours, by the way. If you guys are not familiar with Equities Tracker, go ahead and check them out on Facebook. They have a great following on Facebook. Great guys in Malaysia. And Andrew Vong, very smart guy. I mean, I absolutely love having conversations with him. And he provided some good data on what the Bitcoin halving event really means. And he says essentially it's a reduction of Bitcoin's inflation rate by half to 1.8%. So right now that inflation rate, by the way, is around 3.8 to 3.9%. That's obviously the incoming supply rate, although it's really called the deflation rate since the Bitcoin supply is obviously deflating over time. Or the incoming supply is, at least. And so yes, the Bitcoin monetary supply is still inflationary, but it is gradually being slowed down every 4 years until it reaches its theoretical hard limit of 21 million. The CAGR of M2 in the U.S. stands at roughly 6.5% from 1974 to 2020. That's 46 years. For society and the economy to function, it isn't the case of choosing between the two, but rather having Bitcoin be the yin to the USD's yang. So great quote from Andrew. Much love, brother. If you're listening to this, I hope you enjoy it. Really great quote. And then I want to read off another one from my homie Alex Libertas from the Daily Chain. And he says, there is no doubt that COVID has had a major impact across all markets globally. However, since Black Thursday, we have seen a 105% increase in Bitcoin as we make our way up to the 2020 halving. Although we have seen quite rapid increases in prices at previous halvings, I personally believe that the 2020 halving itself will be a non-event for the first few months. We may actually see a decrease in price as the broader economy struggles to return to normal. With over 20 million Americans unemployed since ADP began in 2002, it's difficult to see an immediate price explosion for an asset that is still often known as extremely volatile and unpredictable. And yeah, so I want to go ahead and talk about what he just said there. I do believe that, so here's what happens with the Bitcoin halving. I spoke about this in the last episode as well. So what happens in the Bitcoin halving is essentially the incoming supply of Bitcoin, the block reward, gets cut in half. So if you're a miner and you're relying on 12.25 Bitcoins per block being generated, you can count on that amount of Bitcoin being there for you to sell to keep your operations afloat. Because how else do you keep your operation afloat? You have to sell off Bitcoin to be able to continue to mine because you're spending a lot of money on electricity. So, of course, running the operation in general, there's a lot of costs involved. However, when you literally have your cost cut in half in a second and literally in 10 minutes in a block, that is going to cause a lot of these mining operations to shut their machines off, at least for some time, if the Bitcoin price is not already double what it needs to be for them to be able to sell a little bit of Bitcoin to be able to keep their operations afloat. So what I'm basically saying is, if the Bitcoin price is not like $16,000 to $20,000, maybe $15,000, somewhere in that range, then essentially these Bitcoin mining operations would have to cut off their operations because they cannot survive based on 6.25 Bitcoin block reward. So that price would have to start going up. Now, at the same time, there are going to be Bitcoin miners and mining operations that say, okay, we've got reserves, guys. We've got reserves set up. I don't give a crap, what happens with the Bitcoin halving. We're not turning off our mining operations. And we're not turning them off because we know that if other people do, if other mining operations do, we have a better chance of winning that block. So the difficulty adjustment decreases because you have less miners competing to win the block. So essentially they have a much easier opportunity at winning the block than they did before the halving. So right now, there's an all-out war to compete to win the block right now because they're all trying to get as much Bitcoin as possible, that's 12.5 Bitcoin, before that 12.5 Bitcoin per block reward gets turned to 6.25. So it's a very big deal. I actually think that it's very possible that a lot of these Bitcoin mining operations maybe test the waters and see if it's possible to stay afloat and see if anybody else shuts off their mining operations, and then maybe see what happens, turn it off if things don't go the way. But either way, the thing you have now is an instant demand shock, because you no longer have 12.5 Bitcoin coming in, you have 6.25. And it's not like, I do want to highlight what Alex said about the unemployment rate. Alex pointed out that over 20 million Americans are now unemployed since the ADP began in 2002. This is a big deal. This is obviously because of the lockdowns from COVID. So it's very possible that a lot of these people could start selling off their Bitcoin. We don't know. We don't really know how many of these people who are unemployed own Bitcoin. That's another question. But we do know that the economy is going to take a hit. And this could obviously be a factor for the Bitcoin price dropping and people selling. Although I also want to point out that there was an interesting metric that I saw from Sentiment where the supply of Bitcoin on exchanges was actually flat. And actually it had pretty much dumped off since Black Thursday, which, if you're not familiar with Black Thursday, it was pretty much a day where Bitcoin dropped like 50% in one day. It was bad. But it's great now because it's over like 150% or 100%, something of that nature. Yeah, it's very interesting. Again, shout out to my boy Alex Libertas. Thank you for that quote for this article. And by the way, if you guys want to see the article I'm talking about, this is our Bitcoin halving special that we put out on the Modern Markets Substack. So if you want to go ahead and check that out, it's modernmarkets.substack.com. Definitely check it out. Go ahead and subscribe while you're at it. It's great content. Cal Toro puts this out for us every single week, and he's an absolute beast. The dude just works his butt off to get you guys the best data. So if you're not tuning in to the newsletter every single week, you're missing out. And it's all free. So the newsletter is free. We haven't decided to do a paid option yet, and that's solely because we wanted to give you guys all that free content. So go ahead and check that out. Let's go ahead and let's talk about the previous Bitcoin halving. What happened in the past? In the past, Bitcoin actually took some time after the Bitcoin halving to break the previous all-time high, which at that time was, and I'll go ahead and pull up the charts just to make sure I am getting some accurate information. So in 2016 was the last Bitcoin halving. The last all-time high of November 13 was around $950 to $1,000. So $1,000 was pretty much the threshold that was not able to be broken until 189 days later after the Bitcoin halving happened, which was I think it was in June, I want to say. Could be wrong about that. Somewhere around there, but it was 189 days until the Bitcoin price finally pushed past the $1,000 level. And that's when of course, the 2017 strike up to 20,000 happened, and then of course we got to this point. So we may see some time pass before we actually get a proper all-time high break of 20,000. But you can almost, and I won't give any price predictions. I gave some on another stream, but you can almost bet that the time frame could be much lower, especially when you have institutions putting massive interest into Bitcoin, basically putting all their money and putting their bet on Bitcoin to be the fastest horse to win the race. I think it's definitely going to be a shorter time frame, especially because 2016, many people didn't even know what Bitcoin was. Bitcoin has a lot of mainstream attention these days. So it's a very different story as opposed to what happened in 2016. And then, a lot of people, we actually got some data from Lunar Crush. This is really cool. A lot of people have started to, thousands of posts are coming out about the Bitcoin halving over the last 30 days. So we're definitely seeing a lot more intrigue, and it could be a non-event. We will see what happens. But guys, that is, pretty much a sweet wrap up of what the Bitcoin halving is and what Bitcoin is. And I really hope that this kind of explained a lot of this for you. I hope this was a sweet video for you guys to listen to. I'm going to go ahead and put this up on the Modern Markets YouTube. If you guys like stuff like this, if you like the kind of format I'm doing right now, I can do this in between podcast episodes that I have with, actually I got a couple coming out. I got one coming out with the CEO of Dragon Chain. That's going to be sweet. That's going to be awesome. Then I got the Lunar Crush guys, John and Joe, coming on as well. So there's a lot of really good content coming out, guys. It's really, really awesome to be in the crypto industry right now and just, really enjoy what we're seeing right now with Bitcoin. I mean, right now we're looking at almost $10,000 for Bitcoin. It's a really exciting time to just really enjoy technology and finance right now. It's a revolutionary time to be in this industry. So hope you guys enjoyed again. If you want to check out the newsletter again, modernmarkets.substack.com. Check out the podcast at anchor.fm/modernmarkets. And if you guys want to see more episodes like this, make sure to leave it in the comment section of the YouTube video or just hit me up on Twitter at Tytan Inc. I would be happy to respond to you. So thank you everyone for listening. I hope you enjoyed. I will see you in the next one. Peace.